Hi, my name is Gerardo Herrera. I'm Communication Director of RiskMathics. We are here at the Risk Management and Trading Conference 2023, and I have the honor and pleasure to have with us Troy Kane, one of the most successful traders of one of the most successful market makers in the world, Citadel Securities. Troy, it's such a thrill to have you here with us.
Thank you. It's an honor to be here with you.
I guess the first thing we want to understand, especially given the fact that we are a company that trains professionals, that trains younger generations that are going to be leading markets in the future, what is the career path, the life story of Troy Kane, the trader?
No, I appreciate that question. It's an interesting story. So I come from a multi-generational family of traders in Chicago.
Ooh.
And actually got my start at 14 on the floors of the Chicago Board of Trade, clerking in the summers in corn and soybean futures. So I started in the futures industry. I clerked every summer in high school, and that was when the trading floors were at the highest and busiest of the 150 years that futures had been trading. And right before electronic trading really got kind of built out and reached maturity. So my first job was to go into the pits, collect the trading cards for the traders, every 15 minutes give them their position, so tally up all their buys and sells, and then go back into the pit and tell them what their position was so they knew if they have to offset it and trade more or less based on what they were trading. If it was really busy, which in the summer times in Chicago for grains, that's when most of the markets were very volatile for grains and oilseeds because that's when the planting season is in the Midwest in the US. And so if you got it wrong, it was a big mistake. So you tried not to be wrong. When I graduated from high school, I started at the exchange and was a market reporter. So I was in the 30-year pit at that point. And the market reporters were the ones that were responsible for capturing all the trading that went on in the pit so that it could get transmitted to the wallboards and then get transmitted via market data out to all the participants that were trading U.S. Treasury futures. Fast forward a few years, I started working on electronic trading development early in my career and actually got an opportunity to work at Eurex and learn how trading systems were developed there, and then came back to the US and helped the Board of Trade build out their first trading system, which was called ACE at the time. So I spent a good amount of my early career doing trading system development and design, and eventually moved into front office management, where I was working with a lot of the trading firms that traded through the exchange that were more sophisticated, algorithmic, automated trading, and got introduced to Citadel Securities, through those roles.
Give us some context. Most of people, especially in North America, will think of Citadel as Citadel, the hedge fund.
Yeah.
So what is the difference between the hedge fund and the securities division?
So Citadel is what was started by Ken Griffin in 1990, and that was the traditional hedge fund asset management business that we have today. In 2002, Ken decided to create Citadel Securities, which is a broker-dealer or market-making arm of Citadel. And so the difference is a market maker is providing liquidity either on exchanges or in bilateral executing models to clients. And those clients range from retail, institutional, banks, and so we're classified more as a market maker or a quantitative trading firm, where Citadel LLC is an asset management and hedge fund. So they represent or manage other people's money, where Citadel Securities is also considered what we call a principal trading firm. So it's only trading principal capital. We're not trading on behalf of clients. We're intermediaries. We're providing liquidity. We're providing the ability to trade. We trade in over 36 countries globally, and we trade over 3,000 instruments.
Okay, you are head of derivatives in this Citadel Securities, and that's where I want to continue. Listed derivatives. So some of their best years in decades in 2020, 2021. And now it's kind of flattening. I don't know if coming back to normal. So give us some light. What happened in the last 2 years was a seasonal rally due to the backlash of economic recovery, or was a qualitative jump in derivatives trading?
Yeah, I think there was a couple factors that played into the growth of derivatives, specifically options volumes. I think futures volumes have been steadily growing for many years before COVID and before the pandemic. But options have really hit a new height of activity and participation across multiple types of investors. So in the US, a lot of the brokers, specifically retail brokers, were doing a lot of educational campaigns to help individual investors understand why they should trade options, and then starting to onboard those retail and individual clients into the ecosystem that existed already. In 2018, we saw something happen in the industry that really changed things, and that was going to zero commissions in the US. So brokers stopped charging commissions for retail clients to be able to trade at equities and options. And that really unlocked a lot of interest among individual investors to come in and actually start to really learn and want to trade in equity options. So you take that into 2020, and you have a bunch of individual investors that have access to the market, working from home. There was a lot of volatility in the market at the time, as well as a result of the pandemic. So you had a lot of institutional investors trading options for risk management and hedging and investment strategies, and then you had retail coming in that complemented that because they were interested in trading a new asset class. So that kind of carried on for a couple of years, and we saw volumes grow pretty rapidly for a couple of years. And then this year, we're still up 10% year over year in the US at least. But where we see the most growth in derivatives right now are in macro products, so not in single names, but in ETFs and index. So we've seen a 40% growth in index options in the US, and we've seen about a 14% growth in ETF options in the US. And, as ETFs have become a bigger asset class in general, the options have really carried on a lot of that ecosystem to individual investors, which is where a lot of the volumes were propped up over the last few years and where they continue to grow. When you look outside of North America, you see a lot of index options trading happening in emerging markets. India, the Nifties are now the most traded index options in the world. You have KOSPI, you have Nikkei, and that's because a lot of countries have started to unlock the retail or the individual investors' access to the market, and a lot of countries like their retail clients to trade derivatives over the underlying securities. There's a little bit different risk profile with it.
Okay. You mentioned, when you talked about your personal history, one asset class, commodities, especially agricultural commodities.
Yes.
There are two asset classes that Latin American countries are very sensitive to: agricultural commodities and FX commodities, and FX derivatives, sorry. What is your view on these two?
Yeah, I think what's been great to see within the derivative space is how many more asset classes are really tradable today. Ags were the start of derivatives, or at least futures. Equity options came 30 years ago. And so we've seen a lot of other diverse asset classes come in: energy, metals, FX. We see carbon markets now. We're seeing ESG markets come in. So, it's been great to see how exchanges are innovating and creating derivatives, futures, and options on underlying assets that actually have real hedging and risk needs in the marketplace. And ags are the fundamentals of that, the foundation of that. You have corn futures here in Mexico, you have soybeans in South America, you have corn, soybeans, and wheat in the US. And it's really grown as a really robust and liquid asset class for futures, and then options trade on those as well. We've seen a lot of growth in short-dated options in commodities, both in energy and ags, as a result of investors and hedgers trying to get access and unlock a lot of leverage in the market.
Okay. Right now, that markets are still waiting for the recovery of equity markets, and because of high interest rates, a lot of people are saying, let's go for the traditional 60-40.
Yeah.
Fixed income, floating income, variable income, why go alternative investments?
I think
what would you say?
Yeah, I think it's important now for investors to understand that the more diversified they are in their investment strategies, the better off they're going to be long term. They got to think about the long game, and you're going to have different volatility waves for different asset classes. We saw almost, at least in the US and Europe, you saw zero interest rate markets for over a decade. Not as much in LATAM, but LATAM interest rates came down quite well over the last 5 years. And that encouraged investors to rethink their portfolios and start to look at equities or maybe alternative investments to try to beef up their returns back into single digit or to double digits. And so I think even though interest rates are coming back up again and everyone's relearning how to trade fixed income, I think what's important is you want a diverse portfolio. So you should think about what proportion do you think is appropriate based on your risk appetite? What's your risk reward that you want? And I don't think you want to put all your eggs in one basket, to use that analogy, which a lot of people say, because if the market turns on you, you don't have anything to offset that with. And so, because investors have more access to different asset classes today, I strongly encourage them to not only trade multiple asset classes and alternative investments, but to also consider derivatives in those asset classes.
Okay. As a seasoned trader, not necessarily because you trade them, what is your take on crypto?
Crypto is an interesting asset class. It is an emerging asset class. We're still learning it. I think if you were to separate out Bitcoin and Ether away from the other crypto space, I think you can really identify that those products, at least in the US spectrum, they're commodities, no different than gold or oil. They serve some need in the market. I think the market's still figuring out what that need is or what that utility is. But I think what attracts investors to crypto is that it's decentralized. It's not tied to the capital market structure that exists today. And so there's an appeal for young investors to want to trade crypto. Also, crypto has high volatility. We saw the price swings that happened over the last couple of years, but it is highly unregulated. And so, my guidance for a lot of investors is that you need to understand what are the risks of trading crypto. And ensure that you're taking the appropriate measures to ensure or to protect those investments. Unfortunately, regulators are still catching up to how to regulate. I know the SEC and the CFTC in the US have spent a lot of time determining how they should regulate crypto. We see a lot of regulation coming out of Europe now and in Asia. So I think it's just a matter of time before a regulatory framework is out there that gives investors that safeguard that they're used to getting from other fiduciary responsible markets.
Okay. Finally, given all these complexities and all these challenges we are still facing, how important is education and continuous actualization for people in this sector?
It's always critical. And you can be the most senior investor. I've been in my career for almost 30 years. I'm still learning. I'm still developing my expertise in different markets, different product classes. The one great thing I like about being at Citadel Securities is that I'm learning something new every day, and you want to have that passion and that interest to go out and continue to learn. And the great thing today is there's so much access to information. There's your institute, right, that's trying to educate the individual investors. You have a lot of trading challenges and simulators out there that you can utilize to try to practice before you actually start putting money into the market. You can take online courses to learn about how to optimize a portfolio or how to diversify your portfolio. So I think it's very important to continue the education. And the great thing is every year more resources and more medians are coming out to be able to do that.
Okay. Troy Kane, great conversation. Great to have you here. Thank you very much.
Thank you.